Welcome back to the Crypto Report, everybody. I am Crypto Kip, and today I'm going to be bringing a special video to one of our subscribers, actually, who posted at us here the other day. So did leave in a comment in our chat down below, which you can do also. Today's video is going to be talking about interest rates and cryptocurrency platforms. I had a fella, Mo Goggles, actually reached out asking about BlockFi and Celsius. Now, recently, they actually decreased their interest rates, and that's something we're going to be seeing. You know, the rates are going down, even Crypto.com. Now, I did a Cronos video the other day. That's where he commented. So, Mo Goggles, this video is for you. Any of you all out there who want a video based on one of your comments, we're ready to do content from our viewers. We do appreciate y'all very much. Before I jump into this video for you, Mo, I do want to make sure all y'all are smashing up the like button and subscribing to the channel. That does help us out in the YouTube algorithm, and we really, really appreciate the support. Also, if you want some free money, I got some for you at Crypto.com. Also, Femex if you sign up with our referral link. So, without further ado, guys, let us hop into it. I want to show you guys, first of all, the crypto market. So, we're still sitting right around that $2 trillion, just under $2 trillion mark. Some of our trending tokens actually fell out. I don't see Step and I don't see Animal Concerts today, but crypto markets feeling stuck. But you know, we did have a little bit of an uptick in Bitcoin today and Ethereum, so I feel good about the crypto markets. But in this time of uncertainty, what we're looking at is a lot of speculation on whether or not governments are going to start cracking down on stable coins, interest rates, because what they're starting to do is they're starting to compete with CDs and some of these government funds that give these low interest rates instead of some of these higher yields that you've been able to do. You know, at one point you were able to get up to 16% on your stable coins in Crypto.com. Matter of fact, I think some people could have even gotten 16% on USDC. And for a while, I mean, you think about that. If you deposit $100,000 in at 16%, well, then you could be earning $16,000 a year on 100K. Now you multiply that out by 5, and all of a sudden, boom, you're earning close to $100,000. You put $1 million in, you're earning 160,000, 180. Could have been a lot. Now they cut those rates down by quite a bit lately. So let me show you guys, first of all, Celsius. So Celsius, it came out, it was pretty hot. You'll see a lot of other YouTubers promoting it. I've never been a huge fan of Celsius because to me, it felt more centralized. I believe that it's a more centralized entity. It kind of came later to the crypto game. It's not like a true crypto exchange. So what I did is I went over to Crypto.com way long ago, back in 2019, and I started locking up my funds with them, and I was earning 12%. I used to earn 8.5% on my Bitcoin, and I think I earned like 10% on my ETH. Now, I got the rose gold card, so I get a 2.5% kicker or 2% kicker on all my funds that I lock up in the Crypto.com exchange app. So that's something I got going on. But recently, Mo Goggles, you pointed it out, at BlockFi and Celsius, some of the more traditional feeling platforms where you can borrow money, which is really cool. You can borrow money on your crypto, which is pretty neat. But they recently took away some of their interest terms. So you used to be able to lock up your crypto into these platforms. And you can see here, you can earn, which is locking up your crypto to earn money. You can borrow, which I was talking about earlier. They have their own credit card, which I don't really recommend their credit card either. I really don't recommend BlockFi's credit card. I do love the Crypto.com card. Check it out if you guys go to Crypto.com. Use our referral link. But it's a really great platform. I'm a big fan. But Celsius recently cut down their earning rates. So it's what they do. They advertise 18.63 APY, get paid weekly. But when you look at it, well, first of all, they've now got this accredited investor thing at platinum level, which is basically like people that have more money than the average you and me. So it doesn't really apply to the lower income folks or people, you know, not necessarily with lower income, but lower bags, lower investment quantities, lower dollar amounts in these crypto assets. And then they have this now in-kind reward rate. So these are stable coins of sorts, and they're giving pretty high, but it's stable coins. So you're not going to get any exposure to the crypto markets. And you can see some of this. Now they also have some of the cryptocurrencies you can see. Now, 14% for SNX is pretty good, but do you want to hold SNX? I'm not a big fan. I've looked at that project. I'm not a huge fan. DOT's pretty good. 9% for DOT's pretty good, honestly. Matic. So really, a lot of people get concerned about these interest rates, but we all should have known this out of the gates, that these interest rates that crypto exchanges were offering, when you see something that's too good to be true, well, that's because it usually is. Now, these are real rates, and they're not too good to be true, but it's too good to be locked in forever. And over time, as things get more popular, the interest rates are going to go down, guys. And that's just a reality of it. I never set a retirement plan based on these interest rates. I thought about it. If I could get money in sooner, then I could earn more. You kind of get in while the getting's hot. Think about it as like a California gold rush type of situation. Honestly, think of it as if you came in and bought $100 of Bitcoin in 2009, 2012. It's kind of a similar thing. I mean, the gains just aren't as good as time goes on. But you know what? It's still early, and these are really good interest rates, guys. And so that's something to keep into consideration. Now, the main question that Mo Goggles had here was, do I think that the interest rates are going to go down for Crypto.com? And well, I really do. I do think they're going to go down. And matter of fact, when you look at it, they actually added these tiers recently. So tier 1 allocations up to $30,000, you get the full reward. And anything under $30,000 you have locked up and staked, well, then you only get 0.5%. You get half, basically. So any of these interest rates you see, well, it advertises 4%, but if you have less than $30,000 locked up, you only get 2%. So you used to get 8 or 6.5% with Bitcoin, and now it's 4%, but you only get half if you're under $30,000. Now, I have more than that in there. Like I said, my biggest bag's Crypto.com, so I'm getting the full, but it's still not as good as it used to be. It used to be so much more significant, guys. But again, that was a reality that we saw coming. So to answer your question, Mo Goggles, I do think that there's a chance that these get cut down more. Now, they pumped up the Polygon one back to 12.5%. Polkadot. So Polkadot's competitive too here, just like Celsius. So let me just see real quick. Polkadot here is 9.2%. Crypto.com's got 12.5%. Now, if you have under $30,000, then maybe you're better off at Celsius, to be honest with you. But if you have over $30,000, then you're more competitive in interest rates on Crypto.com still. So I think another question that Mo Goggles had for me here, and thanks so much for the comment, Mo. We appreciate it. You were asking, I think, specifically if the card benefits were going to go down. Now, I locked up, and the way that it works is when you stake your money, you stake money to receive your card, and depending on how much you stake, you get more benefits. And so when you look at the cards, you get different cash back. And I think what Mo was talking about is, well, are these rates that you get on cash back going to go down? Like, I lock up $4,000. If I lock up $4,000, am I going to always get the 3% cash back on my card? And Mo, I'm going to go out on a limb here, and I don't have a fact on this, but my instincts tell me that I think they're going to keep that in place. I mean, when you look at a Chase Freedom card, you can get, I think, 1% on all purchases, 3% on selected categories. There's Discover cards. There's spots where you can get 3 to 5% cash back, 1% all the time. But now the Obsidian card, yeah, I mean, I think they'll keep that in place too, because heck, if you deposit $400,000 with them, well, frankly, they better keep their rewards in for the CRO rewards on your cash back when you're spending on the card. I spend on my card all the time. I'm actually going out to Medieval Times tonight. I might even buy my Medieval Times ticket here with my Rose Gold card, get 5% cash back. And I think they're going to keep that in place. I think they're going to keep their card benefits in place so long as the partners continue to agree with that. I think they're going to add more benefits over time, I hope. But I do think they're going to keep this in place. My biggest question, Mo, is are they going to actually keep the percent earn that you have on the locked up? So when you lock up, let's say you want to get the Rose Gold, you lock up 40,000. Well, you get lock in a 12% annual return rate on that $40,000 on top of the 5% cash back on anything you spend using the Rose Gold card. Now, my question is are they going to keep those rates for your lockup? And I also am going to go out on a limb and I'm going to say, yeah, well, because honestly, they better. If they don't, well, then they're going to start losing funds. And honestly, then it becomes a lot less worth it. And then it's not like you're not going to use the platform and you're not going to use the cards, but these cards are really neat. And if credit card companies are able to do it, well, then I think that if you're locking $40,000 up or $400,000 up or $4,000 or $400,000, then they should be able to continue to give you this, because you don't give a credit card company $40,000 or $400,000. Now, they get money on your transactions, but these are all the things that I start to consider. So to answer the question, no, I don't think CRO is going to change your rewards on your card, on your cash back. I don't think they're going to change your interest on your annual percent yield on your locked up terms for your cards. But I do think, Mo, that the crypto earn features will be fluctuating. I think they're could go up, but I think mostly they're going to go down over time, because I think we're dealing with kind of a California gold rush type situation. I'm not an expert on this, guys. This is not financial advice. This is just our opinion here at the Crypto Report. I'm going to leave it at that for today. Thanks so much for the question, Mo, Goggles. We really appreciate it. Anybody else, if you want to dive more into any topics, please let me know. What do you guys want us to do a video on? We are open to feedback. In fact, we encourage it immensely. Thank you guys so much for watching. I'm Crypto Kip. This is the Crypto Report. And remember, y'all, to smash up that like button, subscribe to the channel. And don't forget, you got a DCA hodl. And we'll see you in the next one. Thanks, everybody.